All right, that was a good amount of material we saw here. Let's just recap and summarize everything that we saw. With accounting changes and error corrections, we essentially have four treatments, one of those being an error. Now, with accounting changes, we have changes in accounting principle, we have changes in accounting method, and we have changes in reporting entity. Keep in mind and memorize, I would just memorize it because why not? That way you have to think about it less. Do we affect those retrospectively, prospectively, and then errors, right? We just kind of correct them whenever we have an error. Business combinations, we have our fair value, we have our equity method, we have our acquisition or consolidation method. Lots to say there. I know you're having flashbacks to seeing all of that. NCI, I'm just going to start throwing words out there. NCI, fair value method, right? Investment in subsidiary account. All of those are super important. Goodwill calculations, fair value of a subsidiary. Practice, that will just come with time. Contingencies and commitments, right? Your warehouse burns down. Do you need to disclose it, report it? Generally, things need to be reported in the period that they happen. The number needs to be, but you can still disclose something if it's significant enough. Derivatives and hedge accounting, effective and ineffective portions of fair value and cash flow hedges, really one of the bigger points there. Foreign currency transaction, translation, remeasurement process, doing our math-based questions, understanding gains and losses on foreign currency transactions, remeasurement versus translation, lots to explore there. Leases, big old bad leases. I think that actually came out to be the longest lecture we had here. And for good reason. I mean, that was just a lot of walking through problems, operating finance leases. What type of lease? First, you classify what type of lease it is. Then you worry about the numbers and the actual liability or the assets that you record on your balance sheet. Software costs, R&D, all there, that's going to be technological feasibility. Do we capitalize or expense? Super important, as you've seen. Subsequent events, similar to contingencies and commitments, sort of, you can kind of see the connection there. Do we need to disclose something? Do we need to account for it on the financial statements? You've seen the criteria, you've seen examples. Be familiar with those examples. Lastly, fair value measurements. What is our optimal market to sell in? How are we going to value something? What metric are we going to use? A couple different methods, lower of cost or market. A few things you saw there. Nothing too crazy. With that being said, thank you all for joining. Stay strong. Go stretch. Go get a run in. Go do whatever it is that will give you energy to move forward with this exam.